Good morning, everyone, and welcome to another session of the Festival of Enterprise COVID-19 webinar series. I'm David Stevenson, your host, and thank you all for joining us this morning. I'm joined this morning by Gary Lennon, Business Development Director at BizBritain. Gary, thank you for joining us this morning.
Thank you.
Gary is going to be giving us an update on the CBILS situation, with particular insight into how the situation is developing, given his insight into actually filling out applications, which he has been doing a lot of over the course of the last few weeks. So it's going to be an update session and sort of a general information session on how the situation is developing in that space. So with that, I will hand it over to Gary.
Okay, thank you very much. Thank you, David. Good morning, everybody. So my name again is Gary Lennon. I'm Business Development Director and co-founder of BizBritain Finance. We're a credit broker, and we set up over 7 years ago. So we've been through startup and getting established, and now going through growth phases. So we understand the challenges that people are going through. So just to reiterate, so 7 years ago we cut our teeth on startup loans. So I'm very used to helping people that are uncertain, have issues, need to get guidance and support. And that has then led us into becoming one of the delivery partners for one of the lenders, who was a CBILS lender. And we're now into our 4th week of doing CBILS loans. So before I go into the presentation, what I'd like to try to do is just give you a little bit of an update from this week of what's happened, because there's been lots of negativity about CBILS loans and the process, and there are reasons behind that, and I'll come back to that later. But there have been, up until this week on Monday, there's now been lent £1.1 billion. Over 6,000 loans have been done, and that's more than twice what was the week before. And that's from an 1,800 we'd actually done over the Easter holiday period. So you can see there's some dedication going on from the lenders to try and get these things through. And also that's from an eligible number of loans of about 28,000. So these sort of numbers will be updated regularly and be made available to the public, not necessarily through BizBritain, but there will be another number of ways to get there. So I'll now go on to the actual presentation itself. What my intention is today is to run briefly through the scheme. I will go through some of the details where there are updates, but the presentation will be made available for anybody that wants it, and all the details will be remaining in there. And then what I'm going to do is I'm going to go through more of a detailed exercise of giving you behind the scenes views, letting you know what sort of things are working and not working, and how you can consider when you're making an application what sort of things you should do. Okay, here we go. Okay, so for the purposes of this presentation today, every time I refer to the scheme, I will use CBILS, because Coronavirus Business Interruption Loan Scheme is quite a lot of words to say in one go, and especially at this time of the day. So let's go down. So this is what it is. It's been set up. It's set up as a recovery loan or recovery finance for companies. It's not set up for those people who are starting businesses. It's not set up for those who are seeking growth finance or expansion finance. Not necessarily. It can be used for those purposes, but it's not. That's not what it's set up for. And it's not necessarily set up for those just seeking to get a better deal because they can see some interest-free payments for 12 months. It's really there to help those businesses struggling, who really need to understand what they can do to take their business through the next period of time and then come out the other side. So in terms of the core messages, I think the really important things to note is that this is about lending to businesses that were, up until a point, i.e. probably the best point is to use is December 2019, a business that was viable, likely to be able to be lent to, and also can sustain some debt going forwards. Okay, so there have been some updates recently. So there are no personal guarantees under 250,000. There are some options for guarantees over 250,000, but they do not mean your home where you live. That's really important to note. And also there are some relaxations for loans that are less than 30,000. That's not on these slides, but that's still fluid at the moment. So there are some changes to be made. So one of the key things that people borrowing money and people lending money come together with is people lending the money are there to do it to viable businesses. So it's really important to understand that there's a risk to borrowing money, whether you're borrowing for the first time or you're repeatedly borrowing, and that's fine because you're exercising your use of other people's money to grow your business. I think it's really important to understand is that the lender is taking a risk. And with the CBILS program, one of the key things to understand is it's not the government lending the money. The government is putting guarantees in place that if a borrower defaults, they will pay 80% of the defaulted amount. There is still 20% left for the lender to recover. The problem is with that, the lender also then has to look at, is this sort of business going to be there when we want to collect the money in years 2, 3, 4, and 5? So those are sort of assessments that are being made on a very regular basis. And it's clear that some circumstances have resulted where you might have had exceptional losses last year, for example, because you may have invested. You may have invested in more equipment. You may have grown your team. You may have decided to expand and buy, for example, another business. So there are important things to take into account is that these can be part of the process, but it is ultimately, it's about, is there a viable business behind this? So there will be a link later to look at where you can find out information, but ultimately these are the sort of typical things that you need to be able to be eligible for a CBILS loan. So one of the key things, getting ready. This is helping you. I will tell you more later, but this is helping you. If you cannot access your financial information, if you cannot access your bank accounts and get them ready, your bank statements ready, if you cannot think about what the impact has been to your business, and that's not being patronizing, that's being truthful, it's about saying what the actual factors have come about to get you to where you are and what will happen when you get out of this. So one of the key things at the bottom there is about looking at things like evidence to support it. So what did you have in place that's now been delayed or disappeared? These are the sort of things that give confidence to a lender that this was a business that was going somewhere, still doing well, and actually can get further forward. So just on, these are the links that you can use later on if you have the opportunity to receive the presentation. So you can get information about the frequently asked questions, who the lenders are. There's a bit there for BizBritain, but it's not just about BizBritain today. So I think the key points is that this is a measure of what people are looking to do is if you go back to your existing loan provider or your existing bank, they should be a first port of call. I'll repeat that again afterwards. And the reason being is that they have got some knowledge of who you are and how you've worked together. Otherwise, speak to somebody that can help you, either a broker or other advisors that you might work with, and see which is the best approach that you can take for your particular circumstances. So this is now on to the nitty-gritty of things. So lots of information has been spread, lots of news, not many loans are being done. Why aren't they being done? Why aren't the banks doing what they're supposed to be doing? Why haven't they done it? We bailed them out in 2008. All those are valid things to say. However, what lenders are is they are organisations that finance other people's businesses, and they take a measured decisions based upon what they've already got and also what's coming in. So their first principle of lenders is they're going to talk to customers they already know and try to help them first. This is one of the reasons why it's worthwhile going back to your bank or to previous or current lenders to say, we've worked together, I'm good, let's see what we can do to continue. And the lenders will be aiming to help their existing customers and protect their existing lending. So if somebody's got a loan, for example, with one of their high street banks, and they go back and say, I now need a CBILS loan, well, what they can do is they can say, well, we don't want this business to fail because we've already got some finance with them. We may be able to help them to refinance that debt or go and help them with a new facility. On to the types of lenders available to you. So you may or may not bank with a high street bank. There are lots of new digital banks out there and challenger banks out there. I think the first step is to check, are they already on the CBILS scheme? And if they are, then contact them. There are new lenders coming through. So we're into the 4th week now, and this last week have been announced 5 new lenders. Either this week or next week, there will be some high volume fintech, don't mean to be technical, financial technology companies. These are companies that are using technology, algorithm-based, machine learning, all these sort of fancy words to describe what they can do is they can process high volume and give relatively quick decisions. And I say relatively quick decisions because it's important to know that somebody at some point, if it doesn't kick you out because of problems, then somebody at some point has to have a look at it. That has to be a human being. Some loans are approved primarily based on the numbers, and that's great too, but you can find these out, and these are coming through. With regards to asset finance and invoice finance, if you're looking to buy something physical, or if you're looking to use what you have in your customer invoices, then there are finance providers already set up in the CBILS program that can help you with that. And finally, responsible finance providers. These are companies that were set up to help local companies, local environments. They're there to either help grow businesses or sustain jobs, to protect jobs. Their approach is always been very much personalization. You get to meet them. They tend to be smaller companies. But what's really important to understand as well is that they are looking at lower loan amounts, and they have lowered their maximum amounts recently, because what they're trying to do is to give more finance to more companies. So their intentions are good, but they can't necessarily always supply as much finance as some people require. So, reasons for slow progress. This has probably been understood, but maybe not understood. So, we're one of the companies that's helping to do these sort of things. What's happening is so if you see something like 30 times the amount of leads, that's like getting a month's worth of leads in a day. If you're getting 100 times more inquiries, that's 3 months inquiries in a day. This is the challenge that the lenders and brokers are all facing, is it's helping to understand that this is a current situation, but things are improving. Back to the volumes that are getting through now, the volumes are getting fast, the volumes are getting bigger, the process times are getting less, although for a while they will remain. So these are the reasons that are helping, well, not helping, but these are reasons why things are taking time. So what I'd like to do is just go a little bit more into detail. When you're looking to apply for finance, when the finance company looks at what you supply, what they're looking to do is they're looking to see, is it ready? Can we see all the documents we need? Can we make use of those documents right now? And can we make a decision based upon them? At the bottom, I've put there, partial evidence and documents will put you down the queue. No documents, you'll either get sent to the back or you just won't get a response until you engage and commit to bring some information in. Now, one of the key things we get asked is about what's management information. Management information is about sales costs and profits or losses since your last accounts were done. So some businesses and business owners make use of an accountant. That's okay, but the thing is right now, lots of accountants are also currently overwhelmed with the amount of people looking for them to provide information. And I think one of the good learning points from this process is that if more people start entering their own accounts details, they will be more prepared and also understand where their business is on an ongoing basis. Again, not patronising, not telling you how to run your life or anything like that, but it's just a good thing to do. Because when these situations occur, okay, this is absolutely unusual, but when you're looking to look at finance, knowing where you are in your business is a really good thing to do. So I'll just go on to the next bit. So this is the contentious bit. So why do people get no progress, or why do people get a decline? I think it's really important to say that every lender has their own policies and they are different. Now, I talked earlier about profitable businesses, viable businesses, and also making sure that a business has some worth to it. So what I'm looking down here in these details is just to go through some of those. So if individuals or their businesses have got a really, really poor credit profile, so they've had county court judgments, which are active, they haven't been satisfied. They've got multiple defaults, especially recently. They're constantly overdrafts or credit card limits or very near to limits, and it looks like their handling of credit hasn't been great. That is a big factor why people get a decline. If people have borrowed a lot of money in the past, and one of the key things that responsible finance, not just responsible finance providers, but responsible lending, so from all lenders, is they have to look at, can the business afford to borrow more money? If there's lots of existing debt there, the case is it may not be that that's possible. So that's one of the decisions why people are said no, why people are told no. And just back to the pre-December 19 situation, we understand that since December 19, things have become difficult. And I'm not speaking for all lenders, but generally, lenders understand in this year, things have become difficult. It's not to say that everyone wants to see bad things all through that period, but at the same time, it can be seen that there's an opportunity to overcome those, because before 2019, the things that would have caused problems are the things you can see on the screens. So if you're not up to date with your tax, if you've got a payment plan already in place, this is showing signs of distress in the business, the company's running out of money. If it was already in difficulty, surviving month to month, and cash flow shows that there are unpaids in the business bank account, every so often it was okay, but it all seemed to be very hand to mouth, that can be a sign of distress. If the accounts are showing losses with no exceptional reasons, what that's actually saying to a lender is if the losses are going to continue, the company's going to run out of cash. If the company's going to run out of cash, it can't afford to pay a loan. Negative balance sheets. Probably up until the last couple of years, I didn't really know what balance sheets were, if I'm being honest. And I really got into them And not to say that I want to teach about balance sheets today, but what that tells you is what the business is worth today. So if you look at a balance sheet and you look at the net assets number, that's the value of your business. Now there's ways to improve that, but ultimately, if there's no worth in the business, this is not about personal guarantees, it's just saying, has this business got any worth? If there's no worth in the business, then lenders look at that and think, is this business strong enough to survive? And finally, lots of startups, so seen from startups, lots of startups have self-financed. So the directors or the owners or the partners have put the money in, and actually over time they hope to take that money back in dividends, etc. If there are directors' loans in there still and the business is well established, it's saying that the business is being propped up. It may still not be strong enough to stay in business. So it's really important to understand this. So just to put a factual element to this is, so businesses that are loss making, have no assets or value, aren't growing profits or weren't growing profits, they won't get any money. If your credit history shows you are high risk, you won't get a loan. So hopefully a little bit more explanation here is, so I'll put the disclaimer first at the top. These are not exact and they're not the same for every lender. That's really important to say this. So please don't use these as battery rams for your lenders, because they may have different ways to do things. So if you look at your income, your sales, your revenues, however you describe it in your accounts, if, for example, your annual revenue was, for example, £500,000 and you wanted to borrow some money, ultimately, if you're looking to borrow more than a quarter of your annual revenue, which is 4 times, that's going to be a struggle. It's better when it could be less than 6 times the loan amount. So, for example, 4 times is 3 months of sales, 6 times is 2 months of sales. And the reason is that you're more likely to go forward, because this loan is going to be a continuous payment on your monthly overheads. You're more likely to be able to repay it if the amount is lower. Simple mathematics. Now, one of the other measures is that you can use your staff salaries and wages, and you could get 2 times your annual amount of that. What I would really say to that is, if you imagine that you had this £500,000 business and your staff wages and salaries are 350,000, and you said, well, I'm going to go for 2 times my staff salaries and wages, I'm going to borrow £700,000. Revert to the first line. You can't borrow effectively more than your revenue, because you won't be able to pay it back. So it's likely that you're looking around 125,000 in that sort of circumstances. And if you're using staff salaries and wages, really should be looking at the next point, which is about furlough options. Can you get them paid if possible, if your team aren't currently working? If they're working, then don't try and borrow 12 months worth of salary, when actually within 3 to 6 months you should be getting towards where you need to be. So the next point there is, banks do look at, and lenders do look at, what other things have you got? So have you looked at grants? Have you got other furlough opportunities in there? Because that's going to help, because that's going to lower the debt that you need, and also hopefully help you improve the affordability. So that is being able to pay the loan back. So the next bit then is the 6 months of disruption. So it's really important to understand that, is where your business is now, there is now an opportunity to reflect. And we've all been spending time at home in the last few weeks, and reflecting on different things is what we've been doing in some circumstances. And one of the things is if your business is disrupted for 6 months, i.e. if you have no sales whatsoever for the next 6 months, you need to ask yourself, is there a business left there? One of the key things right now to consider is, if you started the business and you've been in business for a while, but you remember what it was like starting a business, you can do this again with experience. So you can reboot, you can bootstrap, you can think like a startup, you can get rid of the things that you don't need, and you can just deal with the things that you have to have and make sure you can survive with those. So an example of that, and I didn't want to go into lots of examples today, but an example of that is recently you've seen physical trainers going online now and serving their clients through things like Zoom, and they're now supplying services because they can't do it in person. Other businesses are now delivering products, whereas before they were asking people to come to them. Other people now have the opportunity to learn how to sell via e-commerce approaches, whereas previously they may not have done so strongly. So it's about rethinking about what you could do at this time. This may not be a borrowing thing, but it's just something to consider. And one of the final points on this I'd like to just point out is lots of people are talking about what's the interest. Tell me what the interest is. Well, right now, the interest is 0 for 12 months. So rather than focusing on what the interest rate is, and to be absolutely brutally honest, you'll get the interest that your business deserves at right now, nothing more, nothing less. But what you should be considering is, if I can get my business to be where it wants to be or where it was within the next 12 months, I can refinance that loan. And all of the lenders in the CBILS program, I'm not sure about the asset finance necessarily, but most of the other lenders will be having no early repayment charges, which means that you can pay it off. You can pay it off before 12 months, but you can pay it off after 12 months with some of the finance at a better rate. And you will have had 12 months worth of historical progress to show what you've done. So it gives you the chance to build that up. Okay, so that's my bit for this morning so far. So I'd like to open it up to any questions, please.
Great, Gary. Thanks for that. I think we do have. I think we'll have quite a few questions. It's my suspicion. I suppose one of the things that people are unclear on is how long this crisis will last. You made an interesting point on that second to last slide about if in 6 months there is no, if this disruption goes on for 6 months and there is no business, you can't see a viable business at the end of that. Is it worth taking out a loan?
Yeah, well, fundamentally, so there are different stages of business. So there's a startup phase, so getting off the ground, getting established, and that can take a number of years. If you're coming towards the end of that, and you can see that there are really positive signs coming, then it's probably worth taking the risk. If you're at the very early stages of starting a business, i.e. in the last few months you started this business, it may be time to reconsider. It may be time to park this for a while and do something else until you can re-establish this business. So when it comes to should you borrow money, ultimately you should only borrow what you believe that you can repay. And don't borrow if you can't.
That makes sense. And I think you addressed an interesting question. The CBILS scheme is really designed for businesses that are, fundamentally going concerns that have been in operation. It's not really designed for startups, and that's something that I see that there was an article yesterday in the Telegraph about this. People have been lobbying the government because the CBILS scheme rather is a continuity scheme for businesses that are established, and it looks like there is going to be some kind of government initiative to address the startup, world, as it were, in the coming weeks, from what I understand. I know a lot of the fintechs have been lobbying and a lot of startup businesses. So there is something potentially coming down, from the government in that space, from what I understand.
And because we're also involved in the startup loans, the government's backed startup loans scheme, they have changed their rules in the last 3 weeks, whereas what they're offering is high levels of flexibility for businesses that are less than 2 years old. So under 2 years old, any age up to 2 years old, they will offer interest only payments for 3, 6 or 9 months. Sorry, 3, 6, 9 or 12 months. They're also potentially offering freezes where there are loan repayments that don't have to be paid for up to 3 months. The only caveat to that is that at the moment they are a maximum, and I say at the moment, that might change, they're a maximum of £25,000 per business owner. So if there's more than one partners or directors of a business, they can all apply. And those are very reasonable terms, although they're not the same as a CBILS loan because there is interest applied, but it is quite low. It's 6% APR or 3.2% if you do it in real numbers, and those can be paid at no cost.
Okay, great. We have a question here from Dilip, who he's bought a new business, and he has an existing business and is expanding, and it was recently purchased 25th of March and needs 80 to 90,000, and is wondering whether it's better to go to 2 lenders. And I think you did address this to an extent. It's better to go to your existing lender, and the application will be judged on the merit of its viability.
Yeah. So just to recap on that, I can't see the actual question, but yeah. So bought a new business, need 80 to 90,000. So if you bought an existing business, although it's now a new business for you, then there is obviously a track record on that business, but there will be some elements of taking into account your own personal situation. So your credit history and the business's credit history, albeit before you bought it over, that needs to be taken into account. I think do you go to 2 lenders? Well, ultimately, both lenders have to know about each other. You have to declare that because the business must be able to afford that 80 to 90,000 pounds, no matter where it comes from. You can go to 2 lenders for sure, but as soon as they know that there's another lender there, they have to understand, can the business sustain that amount of finance?
Okay, thank you for that. So that doesn't really sound like it'll expedite the process or change the process in any way, really.
You might get 2 different responses. One lender might respond relatively quickly. Another one might be overwhelmed and take a lot longer.
Right.
It's worth asking both. So if you go to a lender, if you can contact the lenders and you can speak to them and saying, how long is this process going to take realistically? And what are your maximum lending amounts, or what are your typical lending amounts? And also, my scenario is this. So in Dilip's case, I recently bought a business. I'm looking to borrow 80 to 90,000 pounds because of these reasons. Is this something that you will entertain? Get the answer up front. If the answer is no, go somewhere else.
Okay, thank you. We have a question here from Tino, which I'm afraid I don't think is probably within Gary's sort of purview here. It's about the real estate sector and difficulty lending to the real estate sector. It looks like a profitable business, but he's struggling to get 250,000. He needs short-term cash flow support. I mean, that's sort of lender specific. There doesn't seem to be a lot of appetite for real estate at this stage.
Yeah, well, yes and no. I think there's an element to that where Santander have said they're not really interested in real estate, for example, but there are other high street lenders that are.
Okay.
I don't really want to specifically name a lender, because if I say, yeah, Lloyds is interested, and then they say they're not, then
no, of course,
wrong advice. However, what I would say is that if you're looking for short-term cash and you have a variety of properties, then there might be some bridging loans or refinance or other short-term finance options that you can have, which may not be CBILS. So it's not necessarily always the only option to use.
William, I think we've sort of answered that question, that the CBILS is not really designed for the startup world, and that there looks like there are measures being put in place to address that, especially in the tech sector. So let's just see here.
Yeah, I'd just like to approach that on high tech.
Yeah.
So if if in technology businesses, the technology business is an established business, then, and it's going through a high growth stage, then there is no reason why a high-tech business can't borrow money. If, however, the high-tech business is pre-profit, but growing revenues, then the other options to consider, and this is being mooted around by venture capital organisations and organisations, where they're looking for the government to start to put funds together to help those people in the early stages of growth, and these are being deliberated on. I don't have any answers. I personally don't have any answers today. However, there could be answers for that within the coming weeks, where there could be equity or venture debt type approaches for those businesses in those type of scenarios.
Okay, thank you. There's a question here from Jeffrey, more of a statement really, but I think maybe this does need some clarifying. I think you've done a good job of it already, but one of the drivers for CBILS is for businesses who cannot access loans under normal commercial terms. What you said is just exact opposite, and in fact, that's not the case. It's really for businesses that could normally access finance under commercial terms, but are experiencing a business interruption due to the coronavirus.
Yeah, I think there's a difference between media, between what's been actually said, and then what you actually find out and what you read. So ultimately, if you can't afford to borrow the money, or couldn't have afforded to borrow the money last year, then there is no reason that you should be expecting to borrow money this year. And that's not the opposite. It's exactly the same as it always would be. Lenders are lending money. The government is not lending the money. Be absolutely clear about that.
Thank you. Yes, I think it seems like, you know, if this does continue no one really knows when it will end, but the numbers coming out of the US certainly suggest that the banks there are expecting large losses on their existing loan books. So I assume that the same would be true in the UK. So obviously, lending that does get dispersed needs to be made on a commercially viable basis. We have a question here from David, which is an interesting one, regarding 50% trading activities. What type of activities would not be recognized as trading? Can you speak to that?
Yeah. So, David, 50% trading activities. So, a business either provides services or products. That's trading. Other income could be, for example, people who own properties and get rent. They may have licensed something to somebody else, and they may be getting intellectual property payments. So those are the income streams that are not actually trading with anybody. They're actually getting income based upon assets that they've already deployed.
Okay, thank you. We have a question here from Wayne. I mean, this is a tricky one, I suppose. New business, first 2 years wasn't profitable, would have been profitable at the end of year 3, but the banks don't seem to be interested. What would you recommend to another lender, or?
Yeah, I think under the circumstances, Wayne, I think the key thing here is the losses that were made. Are they because of exceptional reasons? Are they because of investments? Are they because of things that you did to try and make this a real strong foundation for a really exciting business for the future? If that's the case, that can be understood. And I would suggest that potentially one of the things to look at is to go to a responsible finance provider and have a conversation with them, because they're a little bit more receptive. As long as your credit's okay, they are more receptive, and their ambition is to help people to either sustain existing jobs or to grow new jobs.
Okay. Thank you. We have another question here from Darren, who Lloyd's, he applied 3 weeks ago with Lloyd's, put the application docs and everything at the online stage, and he's wondering how long they should wait until applying to another bank. I mean, if I can just interject with some anecdotal evidence, we did have NatWest on yesterday, who was saying that they were now looking at applications that were submitted in the at the end of the 3rd week of March. So there is a backlog. So I think some patience is warranted, but perhaps, Gary, you can also speak to that.
Yeah. So should you apply to another location, another lender? I would say that if your business is in good shape and you've got a good proposition and you can get the documents and they're all ready to go, if you haven't already been asked for the documents and you don't get a response within the next few days or within the next week from Lloyds, then certainly I would go somewhere and ask somebody else. And with other lenders coming on board, you may get a faster response. But as David has already said, NatWest, like others, so we're also in that position where we've been helping people, and we've just really getting clearing up our backlog. So we're getting over the responding to people from 3 weeks ago, done this week, and now we're up to the last 4 or 5 days. So it's getting faster, and these things are going to improve. But right now, there is still quite a lot of backlog applications to get through.
Thank you, Gary. We have a question here from Raleigh, which I'm not sure the answer to. They are a self-employed contracted foreign language school teacher for 7 years with a small profit turnover, and they're wondering whether they qualify for CBILS.
So self-employed contracted foreign language school teacher. Okay, so an individual. So there is one of the ineligible sectors is in education, but I think it's more of an education location. I'm not quite sure if it's individual subcontractors. So I don't think that's an issue. The issue is a small profit turnover, whatever that means, is can you afford to borrow the money? And if you're self-employed, would it be better off looking at, if you've got 7 years of track record, you could apply for the self-employed grant, which, although it's not going to be available until June, at least you've got something to aim towards. That would be my current suggestion, without knowing the details.
Okay. Thank you. We have another question here from Alex, whose business is in the motorsport sector. Racing is obviously cancelled for the foreseeable future, but they're not suffering badly. They've got good business, good cash flow, profit, and revenue. They are looking at, they see some investment or opportunities on the horizon, and they're wondering whether CBILS can be used for that purpose, potentially to expand when we emerge out of this thing.
Absolutely.
Okay.
Yeah, acquisition. If you can see that this is going to help your business to accelerate growth in the future, acquisitions are definitely an option for CBILS.
Great.
So if you've got the opportunity to take advantage of that, and if you want to buy businesses right now, acquisitions are one of the options. Not with every lender, must be honest, but they certainly are with quite a few.
Okay. Yes. Obviously, we will emerge from this, and we need to build a strong economy when we do eventually come out of this. So I'm sure that sounds like a potentially positive decision could be had there. James is asking, I think you've addressed this already, but about better terms available in the future. And it sounds like the thing that makes sense is to take this business continuity loan now, which is interest-free. There are no prepayment penalties in the first 12 months. And then you can prepay it and then refinance when things start to normalize again.
Yeah, definitely. So one of the things is sometimes people will borrow money just in case, and that's good preparations in some cases. As long as you can afford the repayments for those first 12 months, you may not even use all of the capital. So at that point, you can either repay some of the loan and refinance the rest, or continue with the existing lender, or you could refinance all of the loan if you have used it, and you may even borrow more, depending upon the circumstances. But in each circumstance, if you've shown good repayments and your bank account looks good, your credit rating is still good or reasonable, because there may have been some hiccups this year, then there's no reason why you couldn't refinance at the end of that 12 months. You refinanced before, to be fair, so it just depends on your circumstances.
Great. Thanks, Gary. We have another question here, which I'm afraid there are a lot of acronyms I don't understand. maybe you are able to answer this. Is the state ADI and CBILS the same? I'm not sure what the ADI is. Do I need to declare the EFG loan taken before with this?
Okay, sorry, I think that's just a typo. It says state aid. So EFG is an acronym for Enterprise Finance Guarantee, for those that don't understand that. And what that's there for, the government has been using Enterprise Finance Guarantee statuses and guarantees for businesses and for specifically for lenders for quite a long period of time. I don't recall exactly how many years, but I think it's at least a decade. So what that's there for is to say to lenders, if you want to do some lending to an organisation where there is no security available, either personal or business security, we will guarantee your loans up to a certain value, depending upon the lender. And what they're saying is that the lender then is taking the risk on the amount that's left over. So when it comes to somebody that's had an EFG loan, okay, then and they want to have a CBILS loan, then yes, they can use a CBILS loan as well. There's no issue with that. However, what they do need to do is definitely declare the EFG loan.
Okay, great. Thanks for that, Gary. We have another, just a few more questions. Gordon here is asking if grants count as trading income.
No.
No. Okay.
However, at the same point, yeah, it's not trading income, but it's a cash injection. So it sees that there is money in the bank or money coming into the bank.
Okay. So keep that in mind, Gordon. We have a question here from Alan, who is an owner director. His bank, Barclays, has imposed a minimum loan floor of 25,000, and he doesn't require that much money. It's a smaller business, turnover is around 50,000. Wants around 10,000, and he wants any guidance on how to choose a lender that would better suit his needs.
Okay. So there's what I know today and what I know that's coming up. So in terms of today, the responsible finance providers will do 10,000, but it will take longer. I would expect to see at least 4 weeks on that.
Okay.
Because so he's got 50,000 turnover, 10,000 loan. It looks affordable based upon just simple revenue over loan amount. Mm-hmm. So I'd say local finance providers or responsible finance providers would be one option. There are some platforms and there are some fintechs coming through where you will be able to borrow that money, but you'll have to wait for another week or two before that is available.
Okay. Thank you. Here's a question from Wayne. I think you've addressed this to an extent already. Businesses that weren't, if he has a business that wouldn't have been in profit at the end of December 19, but is close to profitability, would have been by the end of the first quarter 2020. Mm-hmm. Is that somewhere where you would expect potentially a positive decision? It does sound like that's...
I think it depends upon the circumstances. If you can see that, like we talked about, evidence of, so we were going to grow this quarter, we were going to be X% higher than last quarter, etc., and we had orders in place. If you can evidence those orders, even though they may have been delayed or cancelled, that does give you some indication and the lender indication of what was going to happen. Okay. With regards to ongoing losses, so it depends how long the losses were running for. If they've been running for 5 years and it's been propped up by directors' loans, no, you won't get any money. However, if your business was just getting to the point of making profits, it depends. Depends upon other circumstances around that too.
Okay. We have a question here from Ella, who opened a business in November 2019, so recently. It doesn't have much in terms of backdated accounts, obviously. I'm wondering whether it's still worthwhile applying.
Sorry, which person was this?
This is a question we have another question section. Sorry, Gary, it's not.
Okay.
part of the ones on the side.
Ah, right, okay. So, so the business was starting late 2019?
Exactly. November 2019, exactly. So it's only a few months old.
Okay. I think this goes back to the startup loans options. If LO requires less than 25,000, then startup loans are really, they're available for you and will be receptive. It can be a quicker process, in all fairness, because this is a scheme that's been running for over 8 years, and knowing from experience is the process is quite slick, as long as you're prepared to put the time and investment into your business plan and your cash flow, and provide any documents requested quickly. We've seen turnarounds on startup loans in less than a week.
Okay. So that sounds like probably a better option, Ella. There's another follow-up question here from Wayne, which is quite an interesting one, wondering if there's a limit, of which banks will automatically approve funding through an online application, for instance, 10 or 25,000.
Automatically approve. Automatic approvals will be where you've got a very good credit score, you're not highly indebted currently, you're already a borrower, and if they look into your bank accounts, they can see your bank account is managed well and you're not always at your limits, and you're looking to borrow possibly less than 1/4 of your annual turnover.
Okay. There's another question here from someone asking about de minimis grant, whether that needs to be declared in CBILS applications. I don't know what that is.
I don't think it is. I mean, it depends upon how much the de minimis grant was for. CBILS is not, it is state aid, so there is an element of state aid support for there, but the aid is to the lender. I think that's very much about asking the lender at that point, because that depends upon the value of each of those, how much is required, how much is being given in the grant.
Okay. There's another question here which is about, which I think you've addressed, but maybe it needs a bit more clarification anyway, because it's an interesting one, whether there's a drawdown option, i.e. if you get a loan agreement for 100,000 and you don't need to take the whole thing, can you draw down only a specific amount and then not get charged for the remaining balance after the 12 months? Obviously, there's no charge, whoever posted this question, for the first 12 months.
There's no charges to actually apply for CBILS loans, and there's no interest in the first 12 months.
Yeah.
I think there's an element of this is whether this is a loan or whether this is potentially a credit facility. So I think it's probably best to talk to the lenders that will offer either or. So some will only offer loans. If they've pre-agreed an amount, will they offer tranches? Yes, some will, and then no, some won't. So I would say it's just talk to the lenders in each circumstance and saying, is this possible? There's no reason why it couldn't be possible with certain lenders, but with other lenders, they're only willing to do single transactions.
Okay. Thank you. Lauren here has a business who provides software as a service to the leisure sector. It's a UK-based business with UK employees, but the majority of the customers are international. And she feels that there is a criteria that the majority of your business has to be UK-based, or your customers have to be UK-based. And given that the majority of their income is predominantly overseas, would they qualify for CBILS?
I think it's more, so thinking about this one, Lauren, I think the key here is that if your business is still ongoing from your international customers and you can show that you're able to evidence that this is going to continue, then there's no reason why you can't obtain a CBILS loan. I mean, ultimately, you're a UK business. This is helping UK businesses with UK employees. So in the opposite to that, if you were just a headquarters in the UK, but all your employees were in another country, and effectively you're an import-export business and none of your trade actually took place in the UK, then you wouldn't qualify.
Okay. So hopefully that answers your question, Lauren. There is another question here. If a pre-COVID profitable business is looking for a bridging loan to finance working capital during the pandemic, is a business plan required for the application?
Is a business plan required? Not necessarily at this time. I don't think any lenders are looking for major business plans. Most of them are asking you to answer questionnaires or simple explanatory information around certain points. So I don't think you necessarily have to produce 20 or more pages of a business plan, but just be prepared to prepare information around your business about what happened, what was happening before, what's happening now, and what do you see happening in the future. So getting bridging finance is available and depends upon which lender. It may or may not be CBILS. It may or may not be a bridging loan. People call bridging loans for different reasons. It might be a cash flow type loan, and there are other providers for that too. So it's just really looking at the individual circumstances. But ultimately, answer the question, do you have to have a business plan? Not necessarily.
Great. There's a question here from a chap, Wazi, who has a travel business. It sounds like it has quite a lot of turnover, 25 million per annum. And he has two questions. One is whether there are any capital repayments in the first 12 months of the CBILS, which there are not.
So first question then, so are there capital repayments in the first 12 months? Yes.
There are, okay.
There are. It's the interest payments that have been frozen, or they're not frozen, they're actually paid by the government. Okay. In terms of capital repayment holidays, currently, I don't know of any currently, but that could change. There is one lender, very specific, but not just a lender, which is the Welsh Development Bank, or the bank, I can't remember the exact name of the organisation, and they are offering 12 months of interest and capital holiday, and also 6 years of terms and 2%. So if you're living in Wales and your business is in Wales, that's a fantastic offer.
Okay, that is a great offer.
The other part?
I beg your pardon?
What was the other part to the?
Well, it was just how the banks are viewing the travel sector as a sector in general, given the risk and obviously the collapse in global travel at the moment.
So the challenging sectors right now are travel, leisure, and hospitality. So ultimately, as we've seen, airline companies are looking for the banks to provide billions of pounds to support them. I think the tourism and travel industry is going through a very tough time right now. And will they be supported? Under certain circumstances, yes. And I think it's very much about what did you have in place long term, what do you have in place for the next few months. So is most of your business invested into the next few months, or have you got lots of long-term customers that are going on holidays next year or towards the end of the year that could still be there and still go on those holidays? I think under those circumstances, I would just say it depends. So talk to the lender in more depth, and they should be able to give you more guidance on that.
Okay, thank you, Gary. So Ral seems to be posting that NatWest is offering a 12-month capital repayment holiday.
Okay.
I'm not. So maybe they are as well. And that was unclear to me also. I misunderstood that. I thought there was. So that's good to get some clarification there. So there is some difference between different lenders. Some are, some are not at the moment. We have a question about rates. You did address this to an extent. Here's a chap who thinks he'll need financing for longer than 12 months, understands the first 12 months are interest-free, and then wondering what the subsequent rate will be from the bank. And I think you've stated that it will be what, commercially, what the bank determine your business should
So
do.
ultimately, very clearly, these are not 12-month loans.
No.
These loans can go up to 6 years, in certain circumstances longer. So depends upon the lender. So the interest rate is applied after the first 12 months for the remainder of the loan. It is actually applied from the first month of the loan, but the government's paying the first 12 months of interest. So are you expecting to get 3.5% above base? Well, could you get 3.5% of interest from your lender before CBILS? And if the answer to that is yes, then the answer to that will be yes. However, if your business can't attract that type of finance where you're getting low costs or very low interest rates, then you won't expect to get it afterwards either.
Okay.
But that will be clear in your loan document. So before you sign a loan document, be very clear to look at what the applied interest is so that you appreciate that that's what's going to happen after the 12 months is up.
Great. And we're getting very close to the end, and thank you for taking so much time out of your morning this morning, Gary. But we have another final one from Louise, and I think you've already spoken to this as well, but asking if your personal credit rating isn't great, but the business is profitable. Is CBILS viable?
So two separate elements here. So you've got the business is viable. So let's just assume that you can afford to pay the loan on its own. That's one element. Now that's really important to understand. That is that business lending is normally to businesses. When it comes to your personal credit profile, I think the best thing I would suggest is to you, Louise, is to go and have a look at your own credit. Download from Experian, Equifax, Credit Karma, something that you can get an actual PDF copy of that you can read and you can send to somebody if they so request it, and they can have a look at your personal credit profile. If in there, and I don't want to do a credit profile big analysis here, but if in there that you have got unsatisfied CCJs, you are just out of an individual voluntary arrangement or a bankruptcy, those are the hard things. If you've got a few missed payments, you may have had some defaults in the last 1 to 3 years, those are the lesser issues. So I think it's more a case of it depends upon the circumstances, and it's not just necessarily the score, it's about behavior. So what things happened and why did those happen? So some lenders, especially responsible finance providers, although they are taking a harder line on this at the moment, is that they may take a view on that and saying, well, you went through a difficult time in your life for whatever reasons, and you're now recovering, and that's now behind you. It happened 3 or 4 or 5 years ago. Then there could be a different circumstance, and they would think they'd be absolutely okay with that.
Great. Well, Gary, thank you. Yes, thank you for taking the time this morning to explain this to everyone. I think it was a very informative session. I think we covered a lot of ground, and hopefully clarified for people, to an extent, what the criteria are and how they're likely to increase their success in lending, and whether it makes sense for them to apply, and how to apply to different lenders, if they're not getting success with another one. So I think it's been a very productive session. We very much appreciate you joining us this morning.
Okay, thank you. Thank you. It's been a pleasure to help and share, and hopefully I've helped a little bit more.
I think very much so. So thank you everyone also for joining us this morning. And we will continue to update you as we know more.
Great. I'd like everybody else, keep looking at the Festival Enterprise webinars. There's some fantastic stuff going on there to help you outside of CBILS.
Thanks very much, Gary.
Thank you.
Take care.